Market news now. Global stocks firmed, underpinned by a rally in computer chip makers, although investors continue to reconsider their bets on when central banks will start cutting interest rates. Oil prices ticked higher as geopolitical tensions in the Middle East and oil output disruptions in the United States overshadowed concerns about slow Chinese demand. Meanwhile, the dollar headed for a second weekly gain in a row, helped by a resilient U.S. economy and caution about when the U.S. Federal Reserve will begin to start cutting rates. However, to talk to us a little bit more about what is playing out when it comes to markets, we are joined by Warwick Lucas from Galileo Securities. Warwick, thank you so much for your time. I mean, let's look at what's playing out here. You've got these Middle East tensions, and yet at the same time, traders are dialing back those expectations for interest rate cuts, especially going into March. What do you make of sentiment right now?
Look, I think sentiment has turned a little bit mixed. I mean, it started the year somewhat positive. I would say that notwithstanding the caution we've seen flagged from central bankers in the past couple of days, I think sentiment is generally moderately positive, simply because I think the base for interest rates has been set rather high, and even if the cuts are perhaps slower than expected, it's still kind of positive. I think where some other negativity might be coming through is if we look at the overall indication of where U.S. earnings are likely to come through in the next earnings season. I mean, basically, so far we have seen about 65% of S&P 500 companies giving negative guidance. And while the average figure that's going to come out is probably going to be more or less the same, 65% is obviously a majority of companies that is going to be negative. So it's sort of like a narrow group that's going to be positive and quite a long tail that's negative.
Yesterday, we had data come out of China with regards to their GDP figures. But I'm curious, from your vantage point, what would you say is the overall consensus on the global economy right now?
Well, I think it's broadly positive. I mean, China does have its own issues in that while they're running a 5% GDP growth, which is actually quite good given that the economy is actually maturing. I mean, Chinese population, for example, has actually declined for the second time now in 2 years. But both of those are the first time since 1961. So you can see that some of the fizz or the pressure for Chinese earnings is off. And of course, why do I mention China in the context of the global? China used to be number one driver of global growth. So quite clearly, as China fizzles out, we're going to have to see that growth replaced by other emerging market countries and at least some moderate positivity from major Western economies.
What would you say are some of the overhangs or risks for investors right now?
Well, I think it's still got to shake off the issue of what's going to happen with rates. I mean, that's going to be a clear one this year, although I think there's a pretty good feeling that they've got visibility on what's going to happen. I mean, so far, though, we're looking basically, particularly in the case of the US, not so much of not a face plant. Pretty sluggish, yes, but not a faceplant. So far, no recession. But let's see. I mean, that was the big surprise of last year, that the recession that was much forecast never happened. Can it be repeated in 2024? I think early indications are yes, but we will see.
You mentioned earlier that about 65% of S&P 500 companies have reported for their earnings. I mean, so far, what would you say would be the main theme for U.S. earnings season this quarter?
So I think a very important theme is going to be where does tech actually go? I mean, obviously, AI is the much talked about theme, with many players looking to have a go via major companies such as Google or Alphabet, I should say, and Microsoft and so on that are actively developing in AI. But of course, another beneficiary are the chip makers, the likes of NVIDIA, AMD, and TSMC of China. And those are actually relatively low risk ways of benefiting from AI because, of course, they need to create the hardware that can drive this growth in AI.
Speaking of AI, if you had to look at last year's investment themes, what would you say would be the early on investment theme for 2024?
Well, I think more of the same. I think commodity bulls, or long-term bulls such as myself, are obviously hoping to see some sign of this, of the green power theme coming through. But I think it's a little bit too soon because, of course, such a cycle is going to involve capex. So that being the case, I think the main theme we're going to be looking at is extrapolation of this AI theme in whatever form it takes, whether it's actually the tech companies rolling it out being beneficiaries. But I think the thing to remember with technology, it's also the users of technology benefit. So from that point of view, AI is very much in its infancy.
Well, unfortunately, we've run out of time, but I would have loved to have a conversation with you in terms of when it comes to investments for 2024. Are you still going to be focusing on some of the big techs, or are you going to be thinking a little bit broader out in other sectors that could be attractive or probably a game changer for 2024? However, let's leave it there. Thank you so much for your time. That is Warwick Lucas, who is from Galileo Securities. That is it from me. We're going to take a quick break, and when we come back, we'll have SME on point. So stay tuned.